Hello and welcome to this video. Today I'm going to be making a stock analysis on Hewlett Packard Enterprise. Now you might not know this, but they used to be part of HP, the company that make computers, printers, and all such stuff like that. If you want to see my stock analysis on HP, I have another one of those on my channel. Now remember, this isn't financial advice. This is purely for entertainment purposes. And like and subscribe if you like this video. Now, if you take a look at the graph as a whole, you can see it is performing that great at the moment. We are trading at, last time it was open, we were trading at 1450. We are down a bit here in the pre-market by 1.8%. So since the start of January, or late January this year, we are down about $10, which is quite crazy. But as you can see, it is quite a choppy stock, but we did see quite a rally up to the top. But then again, you see it has these tops and then pitfalls. You can also see that down here in the RSI, we have huge breakouts. Sometimes we did have one right here, of course, where you see they beat their earnings by 5%, but they were trading all the way up in 87 in the RSI. Now, if you don't know what RSI is, that is the relative strength index, which means if it's below 70 and above 50, it is in the upper channel, which means upwards momentum. You can see that here. As you can see right here, it is trading upwards. And then again, look at the graph up here. It is trading upwards. And then, of course, the same is for when it's below 50 and above 30, it is in the downwards channel. And you can see that here. As you can see, it is trading downwards here and as well in the graph. Now, then we have these spikes or these pitfalls here. That is when it's being oversold or overbought. These are usually quite frequent, that's the word, but they don't last very long. As you can see, it's up and down, and or down and up quite quickly. Now we did see that recently here on the 2nd of April. Of course, that was the Liberation Day of Donald Trump, where he put on huge loads of tariffs, where it was all the way down in 12, and now it's of course up a bit since. So now, if you don't know what they make servers. They both make ordinary servers and high-performing servers, also server arrays, which is the way that you set up a server, the actual physical structures that you have servers in, and they also use these servers for AI stuff, and they are quite great, and they also have subscription-based servers, so they are quite huge in the server market. This is also a reason why I like them quite a lot. Now, as you can see here, they more often than not, they actually have quite nice earnings. They did have a bit of a bad Q1 this year, but of course, so did many companies, and Q1 is usually the worst quarter for every company, so that is also why it's guided lower. And I'm actually surprised that they are guiding even lower for Q2. I think that's quite interesting as they make servers, and I personally do think that servers are going to be the next huge boom, as we did see GPUs selling quite a lot and semiconductors, but servers are the only one that is missing because you can't have a AI data center without the actual storage. But maybe that is because it's thought that Dell or IBM or maybe Micron will have those instead of Hewlett Packard, but I do like the company quite a lot, to be honest. The reason I like them quite a lot is because of the dividends, 3.59%. So it might just be, as you can see here, it looks like a little 13 cents, but then again, remember, the stock isn't worth that much. So always look at the percentage when looking at dividend yields, not the actual amount. As you can see here, we both had March and in December and in September and then again in June. So it is 4 times a year, which means that more you can buy new stocks often. Personally, I like this quite a lot because this means you can easily get a dividend snowball rolling and get more stocks, and that way you can invest more often and more often and more often. Now, annually, as you can see here, they do make quite decent money. Their margins are okay. Now, we did see, of course, 2020 where they didn't perform that great, but then they have been earning more and more money slowly, and their margins did increase over the past 3 years from 3.09% to 8.58%. Now, quarterly, you can also see that their margins were quite better, and you can see in Q4 and 24 they made 1.3 billion, and then look at how much of their earnings that is. It is almost 60%. Now, if we take a look at the seasonals down here, as you can see, let's just go back to 15, where they split from HP. They used to be a part of HP, but then they split into HP with the computer parts and Hewlett Packard Enterprises with their server and software parts. Now, as you can see, it is a quite different outcome basically every single year. We have some years where we fly huge and some years where we really don't. As you can see, 25, that is this year, we're down 30% already. 2020, we're down by 26%. So yeah, some years it's quite high, some years we fly quite low. So, but of course, this isn't the stock personally I would buy to expect a 200% increase in 3 years. I would buy this for the dividends and then maybe get a 10-15% revenue on the stock. Not, I wouldn't buy the stock to expect them to fly to the moon. So this would be a dividend stock for me personally. I do think it might perform better than, for example, HP, which I just think is going to go up and down. But I think maybe long term this might be a winner, but I wouldn't expect it to be like Nvidia where you gain 2,000, 3,000% in 10, 15 years. Now the technicals on this, as you can see, for the day it's a sell, and then for the month it is a strong sell. So then that is, of course, is because it has been falling quite sharply, even ever since the 7th of March, where we had this poor earnings report here, with down by 1.3%, which isn't really that bad. We just had this huge tumble, and we have quite many gaps in the stock here, as you can see. Let me just turn off my SMA. As you can see, we did see this huge drop, which means that there was huge pressure before the market even opened just to get rid of the stock. So, but ever since then, it has also we did see a small rise, but ever since then it is down, and we did see this death cross back in February of the 3rd of 2025. Now, of course, we did see this huge increase yesterday, but then again today, what are we down by 3% now? Yeah. So again, that's quite unfortunate, but I do think we are gonna see it fall a bit more until we can actually see a improvement in the tariffs worldwide. Now, if we go down here to the analyst rating, you can see it is quite good ratings, to be honest. 5 strong buy, 3 buy, and 9 hold. So as I said earlier, this is a hold stock because of the dividends. So we don't really have that many, but they are quite decent. We do see some all the way up to 23. I do think that might be a bit much. I think it is gonna be around this 17, 18 when the year is done. I think that's quite reasonable. Of course, up 20%, but given where it is currently, that will still be down for the year. And they are guiding a bit down this year compared to last year and the year before that, but then again, they are increasing their estimates in the years to come. So quite interesting. Now, if you did like this video, please don't forget to like and subscribe.